GM everyone, and welcome to Smart Contact, an interview series with the world's most important, influential, and impactful Web3 leaders. This podcast is produced by Web3 Harbour and is supported by Circle, our 2024 Smart Contact lead sponsor. Like and subscribe for more Smart Contacts.
Yamki, it's always good to see you in Hong Kong. We need you to spend more time in Hong Kong. Singapore is good, but not Hong Kong great. Yeah? Do we agree? We agree, right? Of course. No, yes. Okay, so maybe a quick intro on both sides. I know we had a fairly long intro on Circle, but we certainly want to know a bit more about you. I'll do a very quick one on my side, and then we'll pass it over. So my name is Sean. I am now leading the stablecoin efforts at VSFG. Although you will soon see a new branded company that we are pulling together from a regulated digital asset perspective. We primarily focus on two areas. One is spot virtual asset ETF. I don't know if many of you have seen a couple of announcements last few days on the launch of a Hong Kong-based spot Bitcoin ETF. That's from our company. And then also building out a regulated stablecoin, which is why we're having this conversation. I'm also the advisor for Crypto Council for Innovation, which is a regulatory advocacy organization based out of Washington, D.C. And we have opportunities to engage with global regulators around the world, primarily to bring the industry as well as regulators closer together. So when they are writing crypto regulation, they hopefully have a bit more understanding of what the industry is actually thinking about. And at the Crypto Council, Circle is also our latest member joining CCI. So thank you very much, Yamki, and I look forward to engaging with you on that front as well. I will pass it over to you, Yamki. I know you have a very interesting background, so please do share.
Thanks, Sean. First, just thank you to everyone and to Web3 Harbour for having me here for this conversation. I think it's really, really timely. I don't think we had thought about it at the time, but there's so much going on here in Hong Kong. And as someone who was born in Hong Kong and spent quite a bit of time here growing up, and have traveled back and forth, it's really good to see some of the innovation, policy, developments, technology that's being built here. So really, really excited. And to see Web3 Harbour driving that conversation is terrific. So a little bit about me. I essentially work at the intersection of international finance, technology, and government policy. That's where I play. And it happens that here in the Web3 space is where the three kind of comes together. I am the vice president for strategy and policy at Circle. What that means is that I go and figure out how to write the rules and how to advise governments around the world on how they think about this policy. What are some of the pros and cons? How does it work in other places? And then on the back end, how do I work with our partnerships teams, our product teams, and other teams internally within Circle to think about how we build a product, who we work with, who we partner with, and really how to grow the business in the ecosystem. So that's me at Circle. Prior to Circle, I spent over 6 years at a company called Google.
Small company.
Small company. Yeah. And actually, my first gig at Google was in Google Hong Kong. So I spent a couple of years here representing Google with the Hong Kong government, which was quite interesting. And then moved over to Singapore as part of the APAC team, covering Google Cloud and then Google Payments as well. So again, a number of policy questions as well as strategy questions on how to grow the business. Before Google, I spent the early part of my career in the government. I worked at the White House National Security Council and National Economic Council, represented the US at the G20 and the G7 as a negotiator, and a lot of the conversations between US, China, US, Asia, basically all of those conversations between 2012 until 2016, 2017 I've been involved with. Before the government, I've worked in Asia and in the US in Silicon Valley in investment banking. So really just bouncing back and forth, probably like many people in the room. Whether they are born in Hong Kong or have called Hong Kong home, many of us, I think, bounce back and forth between here and wherever we're from.
Excellent. See, I did mention to the audience that you have an interesting background, and you have just proven that. So thank you very much. All right, so I think the conversation today is very timely, as you mentioned, on a number of fronts. Now, there is one particular news that I do want to say up front, just so that we are able to keep to the policies and some of the rules that you have to abide by. And that is, obviously, there's a big news that Circle have filed for IPO. And of course, the company's going through a quiet period right now. So today's session, we are not going to cover that topic, right? And also later on during the Q&A from the audience, please do not ask any questions about that particular process. But everything else, we can certainly be open and chat about various different aspects as it relates to stablecoin in the global economy, as well as the regulatory developments that are happening in the space. All right, so why don't we get started with kind of the state of Circle? I mean, you guys are like the OG of the crypto space. You've been around a long time. You are still the most recognized, but also most compliant stablecoin out there in the markets that institutions are increasingly adopting. So maybe you can give us a quick update in regards to where things are. Most people probably think about Circle and they think USDC immediately, but there's so much more about the company. So maybe you can share a bit more around that.
Yeah, I think there's so much conversation in the digital asset crypto space around the tokens. And it's important to kind of take a step back and to think about what are we actually building. And at Circle, our mission is to increase economic prosperity through the frictionless exchange of value. When the company started 10 years ago, the CEO, Jeremy Allaire, and the team did that actually via the Bitcoin network. It turns out that it's really hard to move value across Bitcoin network. It's expensive, it's slow, it's clunky, et cetera. And around 2017 is when they, because of Ethereum, started EVMs, doing smart contracts to issue USDC. But really think about what we're trying to do. At the end of the day, we're trying to build essentially a protocol to move money at the speed of the internet. If you think of the building of the internet, there is a protocol to connect computers, TCP/IP, that allow any computer to talk to any other computer on the same network. Then there is POP, SMTP, IMAP, IMAP to connect email servers. You don't need to know if one person's using Outlook and the other is using Hotmail, another is using Gmail. It's really that protocol to connect them. The next layer, if you think about it, would be HTTP for movement of hypertext, essentially web data. And the question is, what is the protocol? What is the layer of payment on the internet? That really haven't been solved yet. So much of the money movement is still very slow, very costly. And what we're trying to do, what we're trying to build with stablecoin and stablecoin network is essentially the ability for someone to send money to another person on the internet at the speed of an email. And think about what that means for economic activity, what it means for trade financing, what it means for capital markets, what it means for remittances, what it means for e-commerce, and how much additional commerce that can happen if we remove the friction of money movement that bogs down so many SMEs and people today.
Excellent. So much more of a financial infrastructure, leveraging the internet technology, and then be able to continue to innovate on top of that, given the programmability that a lot of these latest developments can actually bring. Okay, so we'll touch upon that a little bit more later in the session.
Sorry to interrupt the video, but I want to tell you about our 2024 Smart Contact lead sponsor, Circle.
What is Circle?
At Circle, we're building a digital dollar that brings the power of the internet to money.
Circle's the place where crypto meets stability,
where local businesses meet global customers,
and the US dollar meets USDC.
Meet Circle.
Thank you to all of our sponsors and community partners. Now back to the conversation.
Let's dive into the token, the stablecoin, a little bit more. So from a market growth perspective, right? We've seen stablecoin now gone through multiple cycles now, if we even call this current cycle. And I think the latest statistics mentioned that there's about 135-ish billion in circulation, but a lot of researchers now are saying, over the next 5 years, that could go into the trillions, right? 2.5, 3 trillion range. And there's a lot of data to back it up. Mm-hmm. So stablecoin is obviously a growing market. And the funny thing is, I think a few years ago, I keep remembering people saying stablecoin is the killer app for crypto, mm-hmm. right? And it's now actually starting to play out, right?
You coined it first.
I didn't do that. I didn't do a TM, so unfortunately, I can't claim to it. So you guys released a State of USDC report that I'm sure many have either read or will be reading, and you highlighted in the paper a lot of use cases that I think many don't actually quite know, because when most people think about stablecoin, they're thinking about, it's an on-ramp, off-ramp for crypto trading, mm-hmm. right? But there's actually a lot of usage that the evolution of stablecoin, especially one like USDC, have actually evolved into. Share some of the stories that USDC Circle is working on that are not only about crypto trading, but much more in terms of driving economic activities all around the world. Maybe you can share some.
Yeah, I think I'd love to talk about that and hear some of how you're thinking about stablecoins in Hong Kong as well. But I think when people think of stablecoins, the original use case of stablecoins have been on crypto trading, right? It was essentially the digital dollar on the internet. And when people were moving in and out of positions, whether it's Bitcoin, ETH, or some other digital asset, they would move back to a stablecoin. It's much easier. It's fast. You don't have to go back to fiat and deal with potential issues with banks and then move it back when you want to move into another position. So that was the original use case. And I think so much of policymakers and the average user still think of stablecoins as that. But I think that misses the point, because stablecoin is a digital dollar on the internet, at least for USDC, and it is a payment tool. The question really is to think about, if you can move money at the speed of the internet, what other activities would you be able to do? And people kept on coming and asking at every single conference, and I'm sure for all of you who've been to these conferences, it's like, what is the use case? What is the use case? So our team took a little bit of time to put together the use cases, but also a story of what's happening around the world with stablecoins in particular, with USDC specifically. Because the use case for different regions are different, right? How people use money and why people need a dollar-denominated asset is different depending on where you live, the capabilities of the network that you're at, and how much international trade that you do. So we in our report, we cover Latin America, we cover Africa, we cover the Middle East, we cover Europe, and as Peter mentioned, there is a chapter on Asia that I might have tinker with and wrote a good part of. And the story for Asia is this. In Asia, if you were to look at the economies, the trade to GDP for Asian economies are much, much higher than it is for the United States, which is largely a closed economy, around 10% trade. And for Europe, when you remove intra-European trade, because it's the same currency, buying and selling things between Colorado and New York and between France and Germany is easy. It's straightforward. You may even be in the same network. But for Asia, that is not the case. Oftentimes, you may have a trading business that sit here in Hong Kong. You're dealing with customers in Japan, in Korea, and your supply chain is in Vietnam, Indonesia, Thailand. So you're collecting yen and won, and you're paying out in dong and baht. And all of this means that the business, oftentimes, some sort of an SME, have to carry that as a working capital cost. And for those who are in the manufacturing business, industrial business, you would know that you don't get paid until the goods arrive on the other side of the ocean, net 60. That means you don't get paid until your goods that you've produced, you spent a couple months producing, ship it across the ocean, pay for the insurance to get it there, and you hope that the LA ports are not on strike, and then somebody says, I receive. Then the recipient will go and log onto a computer and like send a wire transfer 60 days later. In the meantime, the SME here sitting in Asia is carrying that working capital cost. So we kind of want to put that in perspective and what that means if you have programmable money. What it means if you are able to track, which you can, the movement of the boat and change the risk structure. That if the boat moves 50%, you pay me 25%. If it moves 75%, you pay me 40%. And it's all automated without someone having to get on a computer, get on a bank, do a wire transfer, pay a fee every like 15 miles, right? So what would that look like in terms of risk sharing and trade finance? That's like really interesting. The second piece, of course, is on the consumer use of it. And in that sense, Asia, as we all know, is a high adopter of digital wallets, Web 2 digital wallets. Something around, I think, 46% of the 1+ billion people around the world here have a digital wallet. In Southeast Asia, it's even higher, I think around 56%. So this is a population that is actually quite familiar with using a phone to do financial transactions. And most of the time they do it is through a QR code of some sort, interacting with one another. But they're doing it in probably these siloed systems. So you may sit in Hong Kong and you have money on Octopus, but you cannot pay someone on Alipay. Or you have money in Alipay and you can't do it on WeChat. And God forbid, you're traveling, you have money on your WeChat, but you can't send it to someone in Singapore and Grab. So all of these are siloed infrastructure, siloed ecosystem that really have merchants and users on a network that's built by an aggregator, and the aggregator captures most of the value in the form of data. So what does it look like if $1 that you put into a digital wallet on a blockchain can pay anyone else on a blockchain anywhere in the world? What would that look like? And remittances is another sort of use case for that. And in remittance in particular, we work with a company called CoinsPH in the Philippines. It's a digital wallet and a digital exchange, and they're using USDC as a remittance tool. And as you all know, living here in Hong Kong, there are lots and lots of foreign domestic workers from the Philippines that work not only in Hong Kong, but all around Asia that are sending money back home. Oftentimes, they're paying high fees. Or when they send the money, the recipient gets an SMS. You have to retrieve it within 24, maybe 48 hours. You have to go to some location, and you have to show an ID. If you have childcare, that's a problem. You show it with your ID, you get your cash. You better get home fast. So all of these are risks to the users on both sides. So if there's a way, which there is with CoinsPH, you can provide your Hong Kong dollar, get USDC, send the USDC over to someone with a digital wallet, your friends or family. They receive it on the phone, within minutes. They can hold on to it. They can send it to someone else. They can choose the time when they want to go to a money exchanger to get fiat out in a local currency. That changes the way that that person and that family will think about how they move money around.
So it's quite interesting because what you are describing isn't exactly what many of us in the industry continue to think, which is in order for crypto assets and stablecoin that are sitting on blockchains, you really need to have users that understands and appreciates and sometimes not be afraid of using crypto wallet. What you're talking about is actually being the financial infrastructure. The endpoints that the users are touching may or may not be a crypto wallet, could be a digital wallet, but the aspect of managing keys and all of those things doesn't necessarily need to be there. And I think that's probably one of the key transitions that we're starting to see. Maybe that's partially the advantage of going through a bear market. So, you have less of that crazy speculative, mentality always driving it. But in the old days, we used to old days in crypto is like not that long ago, but old days.
3 years ago.
Yeah, and we used to continue here, right? You got to bring the billion user into crypto, right? Now we're saying actually we're bringing crypto technology, infrastructure, and bring it to the user that's already there, right? And a lot of the use cases that you talk about, even the domestic helper use case, they're not really using, right? They are interacting with it, but they're not using stablecoin. So I think, you were going to ask me, so I'm going to respond to it anyways. Like for Hong Kong, the stablecoin regulation will be coming this year, right? Hong Kong Monetary Authority is very keen on getting that rolled out. And we'll touch on the actual consultation a little bit later on. But what they are very keen on seeing is use cases that actually touches the local economy. And local, it's not only local in Hong Kong, but local in terms of the trading partners that we have, both from a jurisdiction perspective and also from a institutional side as well. So I think a lot of what, obviously you guys are the pioneer in driving this, and there's much to be done, right? Even between stablecoin issuers and operators that we can facilitate. So maybe we'll hold on the regulatory side. So let's touch a little bit more on the stablecoin itself. So the global reserve in terms of currency right now, I think US dollar is about 60-ish%.
Yeah.
I think it's increased due to some of the world conflicts that we're seeing. Usually every time there's conflict, the reserve ratio goes up. But then if you look at the stablecoin market, it's like 99%, if not 99 point something percent dollars. Do you see that normalizing at some point, especially given the potential transition now to places like Hong Kong, where the regulators actually want to see local currency-backed stablecoins? And you and I are both in the industry. We've also heard many attempts in the past. When I was running Algorand a number of years ago, we had a number of local currency-backed stablecoins that never really picked up, right? Because it was mostly for on-ramp, off-ramp crypto trading. But now, fast forward to 2024, do you actually see local currency-backed stablecoins starting to eat into that market share of 99% US dollar? What do you think?
Yeah, so it's helpful that you actually start off with the framing around central bank reserves, right? Dollar is, depending on the particular year, anywhere from 60 to 80% of central bank reserves. There was a period it went down a little bit, and then it's coming back up, as you said. There are other currencies that's tried to, quote unquote, compete for that. But let's be honest, I think when there are times of crisis, people usually flee to the dollar. That's the safe asset. And when you look at international trade, 80+% of those are also denominated in dollars, right? And you walk down the street to any of these industrial buildings and you ask to see a trade invoice, it's generally denominated in the dollar. So there's historical, social, cultural context to that. And in a way, I don't expect that to change, even though it's digital. That the sort of lingua franca, the default currency on the digital world, probably will be the dollar, especially on international related transactions. Now, that doesn't mean that there's no space for local stables that are in Hong Kong dollars, Thai baht, or whatever. And it's less about the percentage, but really think about both the growth of the pie and then the share of the pie. And our thinking is that right now, the stablecoin, quote unquote, market cap, just how many stablecoins there are in dollar terms, is 135 billion, give or take. And that pie will grow, will get bigger, because A, there's going to be crypto trading that's picking up. B, there will be tokenized real world assets, tokenized securities that are getting tested, and it makes a lot of sense to settle tokenized assets with a tokenized cash, which is, at least for USDC, is how we think about it. Then there is the payments use case in the real world. So the whole market for stablecoin will definitely grow. Now, where it grows and how it grows will then dictate, quote unquote, the share. So you can have a much larger share or much larger share of non-US dollar stable, but still in absolute term, much larger US dollar denominated stable. Both could be true.
Right.
And I think we're actually quite supportive of different companies starting stablecoins, and in particular local stablecoins, because one of the sort of the longer, medium to longer term expectation is that you can have on-chain FX. Right now, it's for all of us here in Hong Kong. Some of you probably work in FX markets. It's only works like Monday to Friday, maybe when London's open, and it's like a really weird thing, right? And it doesn't have to be that way. And those of us who function in the digital asset world, this is 24/7, and you should be able to settle even like FX currencies 24/7. And to do that, you would need stable coins in different currencies, which may have the local off ramp. So I expect that to be true. Now, it could be also that these stables end up being the trading, as in real world trading, settlement currency as well. But that will depend on a number of different factors, as well as the two parties involved. Like if someone wants to settle for whatever reason between a Indonesian manufacturer and a Hong Kong-based trader with customers in Japan, all in Hong Kong dollar, of course they're free to do that.
Right. Okay. So maybe now is also a good time to touch on a critical factor, and I think you and I both get asked this question a lot, which is we look at stablecoin, and then there's the natural question: is there enough room for stablecoins, tokenized deposits that come from banks that are on banks' balance sheets, that are essentially operating in a similar sense? And also, in the future, in some cases faster, especially here in Asia, probably faster than the rest of the world, CBDC, central bank digital currency, right? You probably, I think we talked about this. Last year, there was the Hong Kong MA here, went through a e-Hong Kong dollar, that's a CBDC pilot, a number of different use cases, both from a retail and commercial perspective. China obviously is the leader in driving the ECNY. And many other places around. I think there's like 70% of the global economy are piloting, researching, or in the place of implementing CBDC. So you have CBDC, you have tokenized deposits on large balance sheets, and you have stable coins. How do you see these coexisting, overlap? Does that mean when CBDC comes out, stablecoin go away? What's your view?
Yeah, we get asked this question so often. It's kind of silly, but I'll entertain it. So all of this, first of all, can coexist, right? They are different forms of money. And for those who are, monetary policy folks, will be familiar with M0, M1, M2, right? M0 are currency that is liability on the central bank. M1 is money that is liability on intermediary like a bank, and M2 is essentially private money.
Yep.
And this is like a good way to think about it. And the question then becomes, what is the role of M0 versus M1 versus M2? There's a role for it, right? And they're been refined over hundreds of years of experience. We know that banks they hold bank deposits. We treat them like money, but they actually are credit risks on the bank. And when there is a bank run, and there have been multiple times in history when there are bank run, people decide which bank do I want to be with, and what are the other safe assets I want to go towards. So there is a choice question that users will have in the form of stablecoin. The way we think about it is, how do we create the safest form of money? So for us, USDC is backed by treasuries and cash deposits. And the treasuries are held in a BlackRock managed fund. It's got a ticker. It's registered with the SEC. Anyone can see specifically the holdings down to the cust number of the treasuries, as well as reverse repos. So we believe that is a very transparent structure. It also provides users with a certain level of privacy in terms of who they transact with, how they transact, what kind of data is captured versus potentially an M1 or M0. Today, we have 135 billion plus of stablecoins. I haven't yet seen any tokenized deposits. So there's a lot of talk there, but I haven't seen it yet. And then there's some experiments with CBDCs, but nothing really at scale.
Yeah.
Now, I do think there's a role for CBDCs. I think it is good for central banks to upgrade their infrastructure. I would like the Federal Reserve not to be built on Fortran with a limited set of developers. So there are these are things that are not like 1 and 0, right? You can have I think you can have all of it. There's a certain role to play, and upgrading the financial system overall is a good thing. And I like how Eddie Yue, the chief executive for the MA, when he put out the consultation on the Hong Kong stablecoin rules, he also did an insights article.
Yep.
And that actually is the piece to read. The consultation paper, for those who work on policy, have to read it. But that insight, the way he thinks about it, and the way essentially the MA thinks about it, was really helpful. And he actually said there's a role for CBDCs, tokenized deposits, and stablecoins, and the user will choose, right? And it's very reflective of Hong Kong, laissez-faire, right? Hong Kong has different types of currencies. People get to choose.
Yeah. You know, the interesting aspect is that if you think about the notion of programmable money, there's also a way to think about that, which is if it's CBDC, it obviously has its own advantages and all that, but the programmable aspects come from a single source. That's the central bank, right? Because they would want to direct it in a certain way from stimulus and so on and so forth. Versus something like stablecoin, obviously that allows for much more of a community ecosystem approach, customizability, or is that the word? That allows you to then actually do different things with it. Also, the way I look at it is a stablecoin is essentially a wrapper. You can wrap it around anything. When a CBDC is actually implemented, you can just wrap it around the CBDC, right? Because it's essentially M2 wrapping around M0. So I think there's a lot of interesting aspect that could be thought about, from that side. I actually think it's probably even less technical. I did remember a couple of weeks back speaking with the MA, and one of the conversation piece was it's actually much more about how the central banks interact with commercial banks, because that's essentially kind of taking away a core function of what the commercial banks do. And if the central bank is actually the one issuing and printing and interacting with the end user directly in some sense, then the commercial banks really need to transform that business model quite rapidly. So it will take some time to kind of sort out, because this is much more of an industry thing rather than just purely a currency thing.
Well, actually, the MAS, as well as the ECB, have written on this topic, specifically on a retail CBDC. And they generally landed on not so few words that may not make sense.
Right.
In part because, again, for those who are bankers or central banker, there's a relationship between the central bank and the bank, right, in terms of money creation. If a CBDC can be held by end users, retail, then you may not need deposits at a bank. And especially in times of bank run, most of us would choose to have central bank liability, because ultimately that's the backer, right? When you have a bank run, you're there still because there is no access to central bank, and you count on the deposit insurance to protect your money is there. If you have a choice of holding money at a central bank, and if regular bank deposits doesn't pay that much interest, why would you do it? Now, think of that from the central bank governor perspective. You're the central bank governor. You introduce this CBDC that goes to retail. People move towards CBDC instead of deposits. You shrink the deposit base of your banks, which lowers the amount of money you can lend out. So you shrink the credit expansion, you shrink the economy, you're eliminating jobs, and you're shrinking the net interest margins of banks, which then leads to people pulling money out of the bank because the bank is not as profitable, and you have a downward spiral. I do not want to be that central banker, right? You're essentially triggering a potential bank run. So these are the things that central bankers have to really think hard about in terms of the implication of what that means, in part because the way our economy is structured, our financial system is structured, if you change the role of M0 and M1 and M2, you're really changing the way the whole setup is.
Yeah, for sure. Okay, all right. So let's touch on regulation a bit, right?
What are those?
Yeah. Are you pro-regulation or against regulation? No, we have this on record, so let's not go there.
I'm pro, by the way. On record, I'm pro-regulation.
All right. I would probably, I like to normally say pro-responsible regulation, right? Because that is important. Now, in the area of stablecoin, there have been a number of developments in that space. Obviously, in the U.S., there is the money. Let me look at my notes here. Money transmitter licenses, right, in various different states that Circle has been working very hard on championing, as well as having. Singapore, there's the major payment institution license in place. EU, MiCA has dedicated a whole framework around this. UK now have a e-money issuer license, and then obviously Japan last summer have also rolled out their framework, hopefully to be enacted this year, but primarily looking at regulated financial institutions in regards to being the stablecoin issuers. And of course, in Hong Kong, we have that as well. So Circle, as the premier stablecoin global operator, and you've got licenses in many different jurisdictions, how do you look at all of these? Because if you really look at the core of what the policies are, some of them are actually quite different. So how do you evaluate around that, especially given I would anticipate there will be more jurisdictions that are going to be coming into the fray, right? We have some of the leading financial hubs that are now looking at it, so all the ones that I listed so far, but you are going to see more. So how do you look at that?
Yeah, I think regulation is very important. And perhaps I come at it as a former policymaker, so I'm a little biased. But there's an inherent tension within the crypto industry of being totally anarchist and wanting affirmation from the regulators like an ETF. Right, and lots of people have talked and written about this really funny tension. It's like, hey, I want nothing to do with the financial system, but please approve the ETF so that my Bitcoin will go up. Yeah, and it didn't. But I think at the end of the day, we all live in a society that requires building of trust. And policies and regulations, when well designed, ensures that trust. It ensures that when I sign a contract with you, that you're going to pay me. I'm going to deliver the goods that I said I'm going to deliver, and if not, you can take me to court, and we can sort it out in either arbitration or the legal process. These, as messy as they could be, but it's a process. It creates predictability. It creates certainty. And this is a moment, right, for the crypto, the digital asset, virtual asset industry to get to some clarity. We all want that clarity because many of us want to be able to get some sleep, wake up in the morning, go about our business, and move on with our lives, right? We like the technology, we want it to succeed, but we're not trying to, keep an eye on this and see where it goes every single day. We want to figure out a way for people to actually get to a point where they're not talking about quote unquote crypto anymore. So when we think about that for virtual assets, the first piece to be done really is stablecoin. Because it's easy to understand. It's easy to understand for the user. It's easy to understand by the corporates and institutions. And it's easy to understand for a policymaker. It's the digital version of a fiat. That's what it is. Now, how you back that and how you reserve that, has to be structured. The other piece then is, if you have these different regulations, how are they interoperable? Because if they're not interoperable, then because of the regulation, we create walled gardens in different jurisdictions. Then you go back to the world of, here is a PayPal wallet, here is a PayPay wallet, here is a Line wallet that happens to be in different jurisdictions, and they can't transact with one another. They can't move the assets with one another. So it's actually in the interest, I believe, for economic policymakers to think about, you want a good framework for local issuance. You want a high standard framework for that. But how do you think about permitting in sort of well-regulated stablecoins. And it's the same way that you think about banking and finance. So I think there's a lot of work to be done there, and I look forward to having conversations with the stakeholders to do that.
Right. Now, if we dive into that a little bit, though, almost all of these jurisdictions, in terms of the framework that they have put out, whether in implementation phase or still in consultation phases, they're almost entirely fiat referenced or fiat backed. Right? Now, that's easy to understand. You create a digital dollar, it has to be backed by a physical dollar, right? So that is understandable. But obviously, in our space, in the Web3 space, there are things called algorithmic stablecoins. And there are things that are non-fiat backed, right? I mean, you could have a stablecoin that's gold backed, for example, right? Or crypto asset backed. So how do you see? Because I'm struggling with this as well, right? Like there are a lot of innovation that are coming from some of these newer type of stable coins. But at the same time, if you look at the policies that are around the world, including the one in Hong Kong, I mean, they even call it FRS, right? Fiat Reference Stablecoin. Do you see places where these newer type of stablecoin variances that are not directly fiat backed potentially being able to cross the regulatory hurdle that we're quite frankly seeing in the world right now?
Yeah, and first of all, this is going to be controversial. I'm going to say no. And I believe most of the regulators are saying no, in part because A, it's hard to understand, B, it hasn't proven to work.
And there are blow-ups before.
Exactly. I mean, the crypto winter, which is a winter here in Hong Kong at the moment, really started with the blow up of quote unquote a stable coin.
That's right.
Right, that wasn't stable. It was Terra, 3 Arrows, Celsius, Genesis, FTX, on and on and on and on and on. So you can draw a direct line from this quote unquote stable coin to where we are today. So I actually don't believe that they should be called stablecoins, or maybe stablecoin is not a good term. Like we sometimes use the term tokenized cash because we are backed by treasuries and cash in the same currency as the denominated currency. Now, if you want to say I have a tokenized gold, if it's gold back, you have a tokenized, I don't know, commercial paper. You should do that. But to call it a stable coin, I think creates, miscommunicates to the market and introduces risks to the user that they may not fully understand. Right? It's like saying to someone at a bank that here's your cash, but really it's like some random stuff on the back end. I think at one point we tried that. Like there was a gold standard, and we decided that okay, we're not going to do that anymore. Right. So I think for stablecoins to be really recognized as credible and to hold value consistent with what a user expects and certainly what a policymaker expects, it has to be in the same currency, and ideally. It should be low duration so that you're not taking on duration risk. There's no point taking currency risk. In that. I mean, you could for profit purposes, but there's no free lunch.
Yes.
You have to understand what that is, and for those of us who work in finance understand like there's no free lunch. You're taking on some risk, so understand what that is, and if you want this to be used for everyday users, you have to be able to explain it to them, and they have to be able to understand clearly how it works.
Yeah, unless obviously we're talking about the regulated world, right? So there are also always going to be an area and a group that are going to be operating in somewhat of a unregulated space, and perhaps those type of variances could have a place. But I agree with you. I mean, I've talked to many regulators around the world, and they're already having a hard time really grasping the notion of decentralization and crypto assets and cryptography and all of those things. And then now you introduce something that seemingly it's digital cash or tokenized cash, but then at the same time it's based on an algorithm that of course they can't understand. And then that algorithm is based on some crypto assets that they all don't also don't understand. So good luck with having policies and frameworks frame around that. So I agree with you.
Imagine it doesn't take a lot, right? Go back to the days of 2007, 2008. If somebody told you that CDOs are cash,
Yeah.
you would be like, wait a minute, like I'm strip away, it's back. Then you're like, but the underlying asset
Yeah.
is in cash. It's illiquid, right? These are ideally physical buildings, right? Like that concept is essentially what's trying to be introduced when you have different type of asset
Yeah.
trying to be cash when they're not the same thing.
It's funny, right? We've gone through so many cycles, and I don't mean crypto cycles. I mean actual financial services cycles, and yet
Yeah.
it continues to go down that path. So, excellent. All right, so I'd like to thank you for coming on to Smart Contact. And this has been a very timely conversation, given the fact that Hong Kong as a jurisdiction is going through our final consultation and with an expected regime to be later on this year. So thank you again.